Good morning and welcome to the weekly roundup for the week ending Friday the 29th of October. Coming up, as always, our quick roundup of the key stories in all the various markets that happened this week, together with our thoughts and analysis. And of course, before you sign off, please don't forget to click the link below if you'd also like to check out our extensive free stock market reports as they are produced. So, to business, and this week the focus has been on earnings. Now, earnings optimism has managed to overshadow jitters over inflation, supply chains, the energy crisis, and of course rising prices. Investors' love affair with big tech shows no signs of slowing as the likes of Facebook, Alphabet, Microsoft, Apple and Amazon all reported earnings this week. The darlings of Wall Street broadly impressed with some big names hitting fresh all-time highs, although Apple did miss forecasts. The Nasdaq outperformed this week, rallying 2.2%, hitting a fresh all-time high. And the S&P and the Dow both also hit all-time highs as well. The S&P is set to gain over 1% across the week. However, the Dow quickly moved lower and is set to end the week flat. Some industrial firms reported weaker revenues, earnings or guidance due to supply chain disruptions and rising costs. Over in the US, Q3 GDP also came in at just 2% annually, well below 6.7% in Q2 and missing estimates of 2.5%. The weaker data raised doubts over the Fed's ability to cut interest rates, dragging on cyclicals whilst boosting the rotation into high-growth tech stocks. In Europe, earnings were also in focus, with UK banks reporting solid numbers. Meanwhile, miners traded under pressure amidst ongoing concerns over the strength of the economic recovery over in China. And finally, the FTSE is set to gain just 0.6% this week, and the DAX 0.9%. In the exchange markets this week, the US dollar is on track to lose 0.3% across the week, marking its third straight week of declines. Now, the US dollar trades at a monthly low versus a basket of currencies as the weak GDP data saw investors push back on bets of a Fed rate hike. The pound, however, rose 0.3% this week, its fourth consecutive weekly gain. The pound has been grinding higher as expectations of an interest rate increase from the Bank of England increase. And even the euro is on track for gains of 0.3% this week as well, its third week of gains. And this is largely owing to a 0.7% jump on Thursday as the euro capitalised on a weaker US dollar. And this was even despite the ECB pushing back on Eurozone rate rise bets. The ECB concluded that the surge in inflation to a 13-year high is temporary. In the commodities market this week, oil is set to end the week 1.9% lower after 9 straight weeks of gains. Oil prices hit a 7-year high before investors booked profits, following a larger than expected build in US inventories. An announcement from Iran that they are looking to restart talks with the West by the end of November also unnerved investors. If a deal is agreed, it could pave the way for the removal of Iranian oil sanctions, although this is still likely to be a long way off. And gold is set to book gains this week of around 0.5%, owing to the weaker US dollar. Even so, trade has been cautious ahead of the FOMC next week. In the stock markets, Royal Dutch Shell B trades down 3.5% this week after missing third quarter profits expectations. The Anglo-Dutch company posted adjusted earnings of $4.1 billion versus $5.5 billion in the previous quarter, and analysts had even expected profits in the region of $6 billion. A New York-based hedge fund also called for the energy major to be broken up. Over in the US, Microsoft climbed to an all-time high after beating both profit and revenue expectations. Now, Microsoft reported an earnings per share of $2.27 versus $2.07 forecast on revenues of $45.32 versus $43.97 expected. Microsoft saw strong growth in the cloud business, but also overcame supply issues with the PC business posting 10% revenue growth. Shares trade at an all-time high. Also in the US, Facebook announced that it is to change its name to Meta, rebranding in order to distance itself from recent scandals and to focus on the metaverse. The stock jumped 4% on the news. Even so, the stock is still set to end the week in the red for the 7th straight week. Facebook reported upbeat earnings, beating forecasts. Ad revenues have shown resilience despite the changes to the Apple privacy policy. Forward guidance was marginally lower than forecast at $31.8 to $34 billion, whilst analysts expected $34.8 billion. So there you have it. I'll be back first thing Monday morning as usual with a look ahead to what's happening day by day next week. So make sure you're subscribed not to miss that the moment it's released. Also, don't forget our very useful app if you're an investor. And of course, do drop us a comment below if there's any questions that you may have. From all of us here at Atlantic Capital Markets, have a great Halloween weekend. Don't forget the clocks go back this weekend. We'll see you on Monday.